Okay, sorry, yeah, because a little bit flu, so. Okay, so now did you look at the Metico question? The purchase customer list and also the update and draft because can we finish this question first? Then we can look at the next one. Okay. So what is the problem with this customer purchase customer list? Why is the problem with this? Yeah, what do you think? Have you done this question? Or we have done similar questions before? Anybody? What's the problem with the customer list? No problem. What would you do if you get this? Yeah, it's intangible asset. Yes, correct. Okay. So the fact that they recognize it as intangible asset is not a problem, but the fact that they recognize it as indefinite useful life is an issue. Okay. So you're also saying that they have not account for any impairment. Okay, so yeah, impairment also they have not accounted for because they lost the two customers, isn't it? So the two customers that they lost is an indication that you cannot have an indefinite useful life because you know your customers can go to other customers, and it doesn't make sense, right? Because customers are human, will die, right? So you cannot say you got indefinite useful, indefinite customer list. Okay, so this doesn't make sense. Now, how are we going to calculate? Yeah, the second half they got already lose two customers. Yeah, I'm not going to read this because I'm sure you have already read this question. Okay, so now let's continue to write the part where we were doing just now. Okay, so this was Metico. The first one we have already done. Yeah, this one with regards to the railway license. Okay, and going concern. Okay, so this was done. Okay, now next one is on the customer list. Okay, so this is on customer list. This customer list is big. Yeah, I'm sharing screen, right? Yeah. Okay, so yeah, recording. So just video cannot unplay. Okay, so because I flew, I keep on using tissue. Okay, so now yeah, customer list. Yeah, this customer list is purchased customer list. Okay, so this purchase customer list is we again methods to consider. So we're still going to use a Massimo. Okay, so now do we have a R dash R? Okay, now are we going to talk about misstatement? Are we going to talk about the opinion? Do we actually have a details of how much is being misstated? Do you think you have details in terms of how much is currently being misstated? We don't know, right? How long will be supposed to be the useful life? So only if we have, then we can calculate the misstatement. So right now we don't have, and we don't have the figures in terms of whether the what is this? The value in use figure is also appropriate or not. Okay, so all those details we don't have. So it's good. Because later evidence we can come up with more procedures, right? Okay. So now let's look at the first one, yeah, materiality of the misstatement. Which figure would you take, yeah, for the materiality of the financial statement item? Which one should we take? Look at what they've given to you, yeah, in your financial statement. Okay, do you take the figure, the value in use figure or 6.9? Yeah, it's supposed to be 6.9. Why 6.9? Because currently, the carrying amount. Okay, currently they have recognized 6.9. Okay, so when you're calculating the materiality of the financial statement item is what they are presenting in financial statement at this point of time. Okay, so now we write that as intangible. Okay, the intangible asset of 6.9% is 24.3%. 24.3% of total asset and is material. Okay, so we have that materiality amount. Yes, correct. Yeah. Okay. Now remember, you have to calculate your materiality based on the related financial statement item also, right? Okay, so you have to calculate it over total asset in this case if it asks. Yeah, sorry. Thank you. Okay, so now supposed to be over the total asset. Okay, so if it's an expenses item or it's a revenue item, you have to calculate it over PBT or revenue, whichever is relevant. Yeah, okay, so this is also important because examiner go. I think I've explained this when we were doing the audit risk question on materiality. Okay, so must be relevant to the item. Okay, now next one, the accounting standard. Okay, so let's talk about recognition first, then we talk about measurement first. Okay, because this is an item intangible asset which is talking about how much they should measure. So I'll focus on recognition and measurement. Okay, so I won't focus on presentation or disclosure because there's nothing much on presentation and disclosure in this case. Okay, but if it was had for sale earlier, we focused on how we want to disclose it. Okay, how we're going to present it in financial statement. Okay, so make sure you are aware whether which one you need to discuss. Okay, now here is on recognition first. Okay, so on recognition, the purchased intangible asset, which is in this case, okay, which is in this case the customer list recognized. Okay, so recognized as intangible, having indefinite useful life. Okay, so now recognizing the asset as intangible meet the recognition criteria. Okay, what is the criteria? Okay, what is the criteria as per IAS 38? Okay, as it is being purchased. As it is purchased. Okay, so this is already being purchased. Yeah, purchased, and there is probable future economic benefits. Okay, so however, okay, recognizing that it recognizing it as indefinite useful life is only correct if the customer remain, okay, as many customers forever. Okay, or maybe not customers, but this customer and revenue from them is going to be indefinite. Okay, so which is unlikely, yeah. And on the other hand, okay, so on the other hand, the two largest customers have recently, okay, so they have recently switched. Okay, so they have switched to competitors, and this is a proof. This is a proof that the customer list do not have indefinite life. Okay, so you have to take note of that. Okay, now let's go and talk about the measurement, the fact that there is impairment. Okay, so measurement of it is the loss of the two largest customers. Okay, on the list is an indicator. Okay, so is an indicator of impact. Okay, and this customer list. Okay, so this customer list should be tested. Okay, should be tested for impairment. Okay, the carrying amount of this list must be written down. Okay, so written down to its recoverable amount. Okay, however, the recoverable amount is higher than the fair value less cost to sell. Okay, so this is all the standards, yeah. Okay, and higher of cost to sell and value in use. Okay, so the impairment loss should be expensed off to SOP. Okay, so I think this is how you will explain in NCR also. Okay, so now this is the situation. Okay, now let's go and talk about the risk. Yeah. Okay, now quick one. Refer to your financial reporting notes. Yeah, hold on. Okay, so just a quick one. Yeah, I want to take opportunity wherever possible. We go and revise. Okay, so this is IAS 38. Okay, so IAS 38 is that. It is an item that is which has non-monetary asset. Yeah, it's a non-current asset, non-monetary asset without physical substance. Okay, so now initial recognition is it must be identifiable. Okay, so what does identifiable means, right? It should be identified as it belongs to the entity. Okay, so now it can be identified separately. Okay, so like brands, patent, all this I can separately sell it off. Okay, so now it should be controlled by the entity because it's a asset, isn't it? And it should generate future economic benefits. Okay, and the cost must be measured reliably. This too is a general one which apply to all assets. Okay, all assets recognition criteria based on conceptual framework. Yeah, but this is specifically for intangible asset. It should be identifiable. Okay, now if intangible asset don't meet this criteria, it should be charged to SOFP. SOPM. Okay, so for example, right, which doesn't meet the recognition criteria if it's internally generated. Why internally generated? I cannot capitalize because the cost I cannot measure it. Reliably. Okay, how I want to come up with a cost, or how am I going to measure a list that I've generated for years? Okay, like customer list. Okay, so that is on measurement. Yeah, anything that is acquired can be capitalized as long as it meets this recognition criteria. If it's being internally generated, you cannot capitalize as intangible asset. The only exception will be on the research and development. Okay, so we have done all those things. Now let's look at subsequent measurement. Okay, subsequent measurement is it is amortized over their useful life. Okay, and some of the item has indefinite useful life. Okay, so if it's indefinite useful life, then you are required to do annual impairment review. Okay, must. Okay, if there is a definite useful life, which means there is some useful life, 2 years, 3 years, 10 years, 15 years or something, then this need to be amortized. Okay, amortized over the useful life, and you only account for impairment when you only encounter or you only attest for impairment when there is indication. Okay, in this case, ideally, if the assumption of indefinite life is true, then annually they have to do it. Okay, but because we think it is going to be definite useful life, there should be an indication. Indication is that two customers loss. Okay, so now research and development. This now we have done one question. This is a quick one. You can only capitalize when there is a technical feasibility in it. The asset will be completed, or there is intention to sell it. The entity will be able to use or sell the asset. The asset will be able to generate future economic benefit. Entity has adequate technical, financial, or any other resources. Yeah, okay, and the expenditure can be measured reliably. Okay, how do we remember this? We take this probable future outflow. Okay, I is they have intention. Okay, so intention to complete it. Okay, R is your resources. A is ability to use or sell it. Okay, T is the technical feasibility. E is the estimated expenditure. Yeah, can be reliably measured. Okay, so can be reliably estimated. Okay, so that's your E. Okay, remember the pilot. Yeah. Okay, so now all these are some examples. Okay, done with intangible asset. Okay, so now let's talk about the risk in this question. Okay, risk that management may not put through. Okay, may not put through. Okay, risk that management may not put through the adjustment for impairment. Okay, seeing that it may cause further deduction in the revenue. Okay, as it is, did they have increase in revenue or not? Deduction in PBT. Deduction in the PBT. Okay, so consequently, the intangible asset is overstated. Amortization and the risk that management may. I just want to add on, may continue to recognize it as indefinite useful life and not put through the adjustment for impairment, seeing that it may cause the further reduction in PBT. Okay, so consequently, Consequently, the intangible asset is overstated and the expenses. Okay, so most probably the amortization, not probably is this. Okay, so amortization expenses and also the impairment loss will be understated. Okay, so that's the risk. Okay, now in this case, I want to talk about skepticism. Okay, our reason being is here I have some things that management is saying. Okay, management is saying, oh, we have indefinite useful. Management is saying we're coming up with a value in use, the figures which are not sensible for us. Okay, so then I want to be more skeptical. Okay, so we want to say that the management. So this is on you being skeptical about it. Yeah, okay, skepticism. Okay, so the management estimated. Yeah, they have estimated the value in use to be 7.2 million. This does not make sense. Okay, so this does not make sense. Firstly, the asset was only purchased recently. It cannot be increased so much so fast. Yeah, recently for 6.9 million. Okay, and then secondly, the list is now have lesser two major customers. Okay, major customer lost. Okay, to a competitor, and therefore the revenue generated by this list potentially lower than when it was acquired. Okay, so this makes sense to us. We want to talk about it, yeah. But we're not going to say about materiality of misstatement. We can't calculate and justify anything there because we don't really have any figures. Okay, so what we're going to do is we have to come up with evidence. Okay, because we have to ascertain what's supposed to be the actual fair value less cost to sell, or what is the value in use. Does this value in use figure that they are giving here is reasonable or not? Discuss with them why they think it is going to be indefinite useful life. Okay, so all those are going to be my evidence. Okay, so let's start with the first one. Yeah? Okay, so now if you're confused what evidence you want to do, right, go back to your accounting standard. Look at for recognition. What is the doubt that I have? Okay, my doubt is on the indefinite useful life. Okay, now go back to look at the measurement. What doubt do I have? I doubt the value in use. I doubt the way that they have calculated. Okay, what is this? Okay, kalau ini jadi risk boleh. Okay, Matty may also be subject to legal case if the customer in the customer list did not give permission. No. Okay, so when they acquiring this right from another, they actually acquired this from someone. Okay, so now when they want to sell it, they had the control of the those details. Okay, so it's not like an illegal sales or anything. Yeah, okay, so no. Okay, because it's an asset which I have control over. Okay, because I can only call it as intangible asset because I have control over it. So now, yeah, it's not going to go to that extent. Yeah. Okay, so but it's good thought that you are not just accepting every answer that is provided. You're thinking, okay, so that could be okay. So now, yeah, but not at this situation because it was purchased from somebody who have sold it to them. Okay, now I think you are thinking about like in Malaysia the banks will sell the information. We don't know, some employees are selling information about us to outsiders. No, that this is not the case. Okay, so this is a valid purchases. Okay, so don't need to worry from the legal perspective of it. Okay, so now evidence. Now we want to go and discuss with the management. Okay, so to understand, so we want to understand the rationale behind thinking that the customer list has an indefinite definite useful life. Okay, so secondly, I also want to confirm this is the price because why you suddenly come up with value in use so much higher. Okay, so I want to go and inspect it. Okay, so inspect the legal documentation. Okay, the purchase legal documentation for the purchase of the customer list. Okay, to confirm the value is 6.9 million. Okay, and then after that you can go and inspect the cash book. Remember, if you have any figures, you can always go and look at cash book and bank statement. Okay, to confirm 6.9 million was paid for the customer list on 1st April 20x4. Okay, based on the case, yeah. And then the last one is you're going to obtain the client working paper on the value in use. Yeah, working paper on the value in use. Okay, and then you want to recalculate it. Okay, recalculate the value in use and recoverable amount to confirm the arithmetic accuracy. Okay, so you also can talk about whether they have used a pre-tax. Okay, so now I have this question being asked. Yeah, okay. Often now audit evidence means you are saying like this. Okay, so audit evidence means it's the way that they're expecting you to write is something like auditor should go and obtain this. Should go and discuss with the management to obtain. Okay, so now instead of putting it in that manner, I choose to present the answer in the audit procedure method because the keywords that they are looking out for is the same. They want you to have the action that you want to do. They want you to have the source document that you want to have, and also what's the objective of doing it. So structuring the sentence can be still applied based on the audit procedure method. Okay, so if you look at the answers in the BPP or if you look at the past paper answers, the way that it is being structured, right? It's like you are putting it in a passive way, okay? Not passive, I don't know what type of sentence is that, but it's more like the auditor should, this information must be obtained, okay? So instead of that manner, we'll just put it as audit procedure because the points that they want is the same, okay? So the meaning of audit evidence and the meaning of audit procedure is what procedure will you do to obtain the evidence, okay? So audit evidence is what evidence is required, okay? So now it's actually the same meaning only, okay? So don't worry, I have used this for the past few years, and I have already confirmed it also during the tutors conference and all those things, that it is allowed, okay, for you to put it in as an audit procedure word. Okay, so if I were to change this to audit evidence sentence, right, the one that you see in the book says, most probably they will say that the client, okay, it's just like this, yeah, client working paper should be obtained, okay, and then to be able to, okay, recalculate the value in use, okay, so to recalculate the value in use, and then you can say to confirm, okay, so it's just structure of the sentence a little bit will change, but yeah, audit procedure way of answering is acceptable, okay, by the examiner also, yeah, okay, so don't worry about that. Is it okay? Do you understand what I meant? Because I don't want to confuse people with too many techniques, so we can just stick with same technique, yeah, audit procedure technique, and answering the audit evidence. Okay, now that part of it, yeah. Now let's go and look at part B of the answer. Okay, so now part B is on the audit report. So even though I have not actually covered an audit report, but I've already covered with you on going concern just now. Okay, so it is now 22nd July. All matter in relation to the purchase customer list now have been satisfactorily resolved. Okay, so I'm not concerned about the customer list already. Okay, following the submission of a customer petition to the government complaining about the company's poor service level on 19 July 20x5. Okay, when is 19 July 20x5? Your year end is your year end is 31st March 20x5. Okay, now this is happening on 19 July. Okay, so it's supposed financial year end, okay, the government released a statement announcing that it will withdraw Metico preferred bidder status and was reopening the tender process for the National Railway license. Okay, so the company finance sector has provided details of the short disclosure. Okay, he planned to include in the financial statement, which referred to uncertainty in relation to the company status and the possibilities of going concern issues which might have arisen for the company as a result. Okay, so the disclosure note concludes with the statement that the management of Metico very confident, okay, that the company will be successful in the tender process and that it will retain the railway license for at least a further 5 years. Okay, so the draft audit report includes an unmodified audit opinion and a key audit matter section which refer to the disclosure note described above and to the related uncertainty in relation to the Metico going concern status. Okay, so there's many situations there, but what is the key thing? Okay, did the management, no, you should start off thinking, is this going to be material uncertainty or it should be a going concern issue already? Going concern issue means, is it, they still can continue the business? Can they not continue the business still? Based on what they have released? No opinion? What do you think, yeah? Now you have to understand what is a material uncertainty. Material uncertainty is an uncertainty. Okay, Sharifa, you are saying they have problem in terms of ability to continue as going concern, correct? You are saying they will not be able to continue as going concern. Is it like that? Okay, yeah, the point of view is they still have other businesses. Okay, they still have other businesses, but okay, so they still have other businesses, but the point is, yeah, it's like this. Okay, so you must understand earlier they have uncertainties in it. Okay, uncertainty, but they were the preferred one. Okay, so which means my uncertainty is most probably something like I had 50% chance of getting it, or maybe like 60%. If I'm a preferred one. Now they are reopening the tender process. It doesn't mean they eliminate. Yeah, they only withdraw the preferred bidder status only. Okay, so which means I still have chance. Okay, but maybe my chance now become 20%. So which means I still have uncertainty there. Okay, now unless the question say that Meti have been removed, no longer be able to cannot get into the tender process at all, then I might think that it will become no longer uncertainty already. Okay, so now in this case, I still have uncertainty because I still under the tender process and I still will have chance to be able to get selected. Okay, so still uncertainty. Okay, okay, so you're clear with it? And even if I am not, if I'm being removed from the tender process, I still can't say I unable to continue as going concern, yeah, because I have other businesses to cover. Okay, so going to say that the company will not be able to continue as going concern is the final thing. Okay, so consider first all these factors before we say that totally cannot continue the operation. Okay, so the company finance that has provided with a short disclosure. Now we still have uncertainty, right? So this uncertainty we view it as we have to make a disclosure in accordance to IAS 1. Okay, but what the finance director has done, the finance director only have made a short disclosure. Okay, short disclosure is not what I want. Okay, so they supposed to give an adequate disclosure, and at the end of the sentence they must not put all this. Very confident will be successful. They will retain no. They must clearly say there is material uncertainty, but the company still can continue going concern. That's what they supposed to disclose. Yeah, all these are not appropriate. And then look at what the auditor have done. Okay, so auditor go and issue unmodified audit opinion, and then go and issue a key audit method. Okay, is this correct or not? Is this correct? It doesn't make sense, right? So ideally, if it's unmodified opinion and if you have material uncertainty regarding going concern, you're going to issue what, yeah? MURGC. Okay, now they are issuing key audit method. Okay, so inappropriate, yeah. Okay, so you want to comment about all those things. Now going back to the question. Your question is reference to Exhibit 2, assume no further adjustment will be made to financial statement in relation to railway operating license. Evaluate appropriateness, yeah. Appropriateness of the draft audit report produced by the audit supervisor. Okay, now when you talk about appropriateness, okay, whether the audit report is appropriate or not, right? So please go and discuss about the nature of the issue first, whether it is appropriate, whether the severity of the issue have been evaluated well, then only discuss about what was the opinion. Okay, so now let's go and talk about what we're going to write here. Okay, so now in this case, I will give you the answer. Okay, so let me just paste this to yours later. But it's a short one. Okay, I want you to type it out. Okay, so hold on. Yeah, where was I discussing? Okay, let me explain to you with an answer, yeah? Okay, so the finance director's short disclosure note ends with a statement that there is no uncertainty relating the going concern, okay? However, there is material uncertainty, and this note should be explained, okay? In what manner? That the tender process is not finalized, and there is unsure status for Meti, will definitely get the tender or not, okay? So this must be stated, yeah? Meti has lost its preferred bidder status, must put in the progression of the operation improvement because these are the determining factor. Clear statement, the fact that the company is facing material uncertainty. All this must be there, okay? So nature, if FD does not provide adequate disclosure on material uncertainty facing the business, yeah, the financial statement are materially misstated and not limitation of scope. Severity of it. The inadequate disclosure is material because it will influence the decision of the users, and there is a possibility that the license is not renewed and Meti will be loss making. Okay, so due to that reason, it is material. Okay, now it is not pervasive because it is only one issue that we have. Okay, now severity of it. The inadequate disclosure is material because the opinion will be qualified except for, or it can be adverse if we view it as significant material uncertainty. Whether the matter is pervasive or not. Okay, but in this case, the matter is unlikely to be pervasive as Matico can still run the business with other segments. Okay, they still have bus operation. Okay, now basis of opinion. The basis of opinion paragraph should be included with the reason for the modification, titled basis of qualified opinion. Position followed with the opinion paragraph. The matter should not be part of key audit matter as there is misstatement in the disclosure. Okay, if it's key audit matter, the matter should be disclosed correctly in the financial statement, but not in this case. Okay, not. Now can I scroll up and down? You going to type it out? You're done, let me know, yeah? Okay, so should be finished, right? Can I go to the next topic? Okay, so now you have this Bayes score, right? Okay, so this Bayes score, okay, I will not do it now. Okay, so you have already done with the Matico question. Okay, so now next topic that I want to do is procedure to completion. Okay, so now procedure to completion, there is also this Bayes question. Okay, it has a combination. Yeah, it has methods to consider and also procedure to completion. So let's look at Bayes when we are doing the procedure to completion topic. Okay, now there is my own question, Arjan questions. Yeah, all these are all good questions. Now let's go and look at procedure to completion. Okay, so audit procedure and further action. Okay, so now have you come across this type of questions or not? They don't ask you on what will be the further procedure. They will ask you on further actions. Have you come across those type of questions? They will not ask you on. Okay, so let's see just now on the this question, right? Okay, so see what they asked here is they say that they're asking you on audit evidence you would expect to find. Okay, so they're clearly saying about what is the audit evidence. Okay, but when it comes to sufficiency, not sufficiency, procedure to completion, they will use the word further action. What will be your further action, not your further audit procedures? Okay, so now very quickly, just let me compile all the notes, then only I upload. Yeah, okay, because there's someone before the break asked me to upload it, right? Hold on, yeah. Okay, this is all. Okay, so this is MTC, isn't it? Okay, now we have already discussed about MTC. Now let's go and look at another point. Okay, another way of getting examined, and this is on procedure to completion. Okay, so procedure to completion is another way of getting examined. Again, yeah, all these are still revolving around the audit standard and the accounting standards. Okay, it's just that the way that they will examine a little differing. Okay, now you know that there is methods to consider type of question. They can ask you on sufficiency of evidence. Now we want to see a question where they ask you on procedure to completion. Okay, so procedure to completion is more of you are already at the final review stage, overall review stage. You are already at those type of stages towards the end. Okay, so procedure to complete the things. Okay, not about sufficiency of evidence. Sufficiency of evidence all will happen before the procedure to completion. Okay, so now let's then understand this. Okay, so when you think about number one thing that you need to understand on procedure to completion is that the audit manager probably is reviewing. Okay, reviewing the audit file. Okay, so why the person is reviewing the audit file is before the audit report before the audit report is being issued. Okay, so now when I'm reviewing, there are a few things that I will look out for. Okay, so number one is I'll just put acronym first. Okay, so before I want to issue an opinion, this is a very important thing that I will need to confirm before I let's just put it in a color. Okay, so I will need to confirm spread. Okay, so what is spread? Spread is I want to confirm that I have obtained sufficient, appropriate audit evidence. Okay, secondly, I want to confirm that the presentation is appropriate, yeah, okay, in accordance to the standard. They are using the right basis. Okay, let's say it's supposed to be going concern basis or it should be breakup basis. They are using the right basis. The error is immaterial. Okay, so even if there is any error, it is immaterial. Okay, and the accounting policy used is appropriate. Okay, and also there is a disclosure. Okay, so these are the things that I need to confirm, or basically you will need to check before you issue the audit report. Okay, now if you talk about sufficient appropriate audit evidence, okay, let's assume if I don't have sufficient appropriate audit evidence, it will lead to a situation where I have limitation of scope. Okay, because I don't have enough evidence. Okay, then this will lead to sufficiency, limitation of scope. Now the rest of it here, well, if let's say it is inappropriate, right? Oh, yeah, shapes. Okay, so if it's something that is inappropriate here, it's going to be financial statement contain mistake. Okay, so I have to understand the factors that lead to limitation of scope and also financial statement contain mistake. Okay, now in short we will call this as financial statement contain mistake. Okay, so now only if all these I tick, okay, all no problem, then only I will issue an unmodified audit report. Okay, so if not, I will need to do a modification. Okay, so this is important when the audit manager is reviewing. You want to confirm all this. Okay, number 2. Let's assume when he is reviewing. Okay. Let's assume when he is reviewing, he have to have to include last minute procedures, audit procedure. Okay, so let's assume if there is a need to there's a need to include a last minute audit procedures. Okay, so you please set some tables so that you can understand what are the scenarios that you can have. Okay. So first one, there is new information. Let's assume new information increase the audit risk. Okay, so initially when you were doing your audit strategy, audit planner, you did not notice that, or you thought this risk is not so of a big deal. Okay, but as you are doing the audit, you realize there is a new info which increased the audit risk. Okay, and then you divided a situation where there is insufficient work done when you are reviewing. Yeah. Okay, so if it is a new information which is increasing the audit risk, the example of question will be failures. Okay, so we will do this question. Yeah. So what we will do is we will need to reassess. Okay, reassess the overall materiality. Okay, and then we might need to revisit management explanation. Okay. We might need to revisit the written representation that they have. Okay, so all these are some consideration, and this will only arise when there is a increase in risk. Okay, so these are some things that you might need to consider. Now, if it is a insufficient work done, okay, it's not about audit risk, but you find it that this work is not sufficient. Okay, so this would be Goodman. Okay, so Goodman group question, the Terman, okay, the one that we have already done. Yeah, sufficiency of evidence are done. Okay, so this part here. Okay, so make sure you should have attempted all this question. Okay, now this part here we will use all those things that we have been doing, audit stuff merely. Again, then we do the job. Yeah. Okay, so that's how we talk about it from that perspective. Okay, so now let's go and talk about what will be the further action. Okay, there is two parts to it. Yeah, one is to include last minute audit procedures. Okay, another one is it can include further actions. Okay, I think too much of media. Okay, so what is further action? Further action and further procedures is not the same. Okay, further action means, right, you might need to consider generally. Okay, generally, like for example, you may need to go and inform, you may need to go and request, you may need to go and warn, you may want to put in that you want to have a quality review situation. Okay, general one. Okay, now what is other action if you have found there is a fraud? Okay, so we have already looked into this CC, IC. Okay, so we're going to confirm, we're going to communicate, we're going to inform, we're going to look into implication and also continuance. Now, if it's a NOCLA, okay, so your action will be UC, IC. Okay, and if it's a money laundering. Okay, so if it's a money laundering situation, okay, so you're going to use the okay, so which we have already covered. Yeah. Okay, so now for fraud, the question will be money laundering yoke, okay, which we have already done. No claw will be pale question. Fraud will be, I mean, this is an example question that you can try. Okay, so Goodman group is a fraud question, and for general one, you might want to look into Arjan. Okay, you can do the rocket question, and also rope question. Okay, so all these are questions, yeah, which you can try when you are doing revision on those topics. All these are new questions, so you should easily find it in the PPP. If it's not in PPP, it should be in your practice platform. Okay, so now when you're talking about procedure to completion, you understand that it might be your further audit procedure, and you might have further action that you may need to consider. Okay, so all this while we always been talking about audit procedure only. So for procedure to completion, you have to take note of further actions that need to be taken. Okay, so now normally number 3 that I want you to take note is you pay attention. Okay? You pay attention to the timing of the scenario. Okay, very important, yeah, because if it's already completed, there is no point. Okay, so whether it is after the completion of the audit work, or you are talking about before the signing of the audit report. Okay, make sure you are where are you? Okay, or whether it is after the audit report is is being signed. Okay, because sometimes we still can amend, yeah, because we can consider this as a subsequent event. Okay, being signed. Okay, because the nature, okay, the nature of the procedures, okay, will be different in each of these cases. Okay, so you want to pay attention, yeah, to the timing. Okay, one last one before we go and try to do the question. Because it's already about something, yeah. Okay, so now let's see what are the methods, how you want to define it. Okay, so remember this is called further exchange. Okay, so just a quick one, yeah. I just want to do some comparison. Okay, so if I call this as further audit procedure. Okay, so if it's a further audit procedure, basically, okay, you already have it. Okay, so at the planning stage. Okay, so at the planning stage, the procedure already already defined, okay, by the senior audit team members, okay, audit team members, and normally these procedures are detailed, okay, so detailed, and also this is to obtain sufficient appropriate audit evidence, and this will be governed by assertion. Okay, so this one is at planning stage. Okay, and of course this is going to be how we have learned all this while here, but in a situation where there is new information. Okay, so there is a new info. You will need to extend the audit proceeding. Okay, so the way that you want to present your answer is just the same. You will have your action. Okay, so you have your action plus with your sources of evidence, and then you plus with your objective. Okay, so this is your further audit procedure. Okay, so you must understand. Initially, we have already come up with procedures, and then we got new information. We have to do more procedures already. Okay, so that is on further audit procedures. Yeah. What about any recommend? Okay, so they will tell you recommend further action. Okay, so if it's a recommend further action, is basically this will happen at the finalization, at the completion stage. Okay, to finalize the audit. Okay, so what do you do? What you need to understand that this procedures are not part of the audit program. Okay, so remember there is a new thing, right? This is recommended by audit manager. Okay, so normally this is not as detailed. Okay, so not detailed. This is not to obtain sufficient appropriate audit evidence. This is not governed by assertion. Okay, instead it will be last minute audit procedure. Okay, maybe you are revisiting the work done previously. Okay, so now I want to have the wordings that you will use. Okay, example, yeah, would for your further action. Yeah, mostly it will be you want to inform. Okay, example is you want to inform management about something. Okay, so you want to inform those charged with governance. Okay, so these are some example. You may want to put in request. Okay, so when you talk about request, request management to put through the audit adjustment. Okay, so all these are not audit procedure. Yeah, these are you requesting. So these are action. Okay, put through audit adjustment. You request management to disclose in the notes to financial statement. Okay, so request those charged with governance, okay, about something. Okay, so that is request. Other wordings that you may have is you want to warn them. Okay, warn them on modification. Obtain management representation, okay, on the refusal to adjust, okay, or disclose, and then you want them, yeah, inform those charged with governance on the consequences. Okay, for example, to the audit report. Okay, so consequences. Another one, last one, yeah, you can ask them, or you can plan to do a quality review. So like you inform EQR, okay, that, and then you can also get the audit report, audit working paper, subject to code review. Okay, so these are some way of doing the further action. Okay, are you all clear now? Probably you will have better understanding when we do the question. Okay, so now these are further procedures, and sometimes they will ask you on this angle of questioning way. Okay, so now the question that we want to try is we look at Bayes. Okay, Bayes. Okay, Bayes question, and then we will look at one on Arjan. Okay, because Goodman and Terman we have already done it. Okay, so look at the question called Bayes in your BPP. It's called Bayes. Yeah, Bayes. What? Don't have. Do you have it? It's that wrong, is it? Yes, it's not really an old question. Yes, don't have. Okay, never mind. We will go and try. God. Yeah. I spelled wrong, is it? Oh. What is this? This one is, I think.
Look, Miller and Co. I think Bias DS Co.
Okay. Yeah, correct. I think I spelled wrongly. Yeah. Okay, can you all just change the notes there? Okay, so yeah, this one. Okay. Let me just run through. Wheeler and Co. Okay, can we look at this? This is on procedure to completion type of questions. Okay, so now quickly we will have this one is actually, I know this is a new question. I think this is more of it's in the mock exam or something like that. Yeah. Okay, so now let's look at. I spelled wrongly. Okay, so now it is 1st July 20x5. You are an audit manager in Wheeler and Co, a firm of chartered certified accountant, audit field work. Yeah, all this done. Now let's see. What is the issue with it? Yeah. Now you are one of your audit client called Beers Co. for the year ended 31st March 20x5 is nearly complete. Okay, and this company is unlisted, family-owned business which produces innovative cleaning equipments. Okay, now the following exhibit available on the left-hand side of your screen here. All this. Okay, so number 1, audit matters. Summary of key issues that the audit supervisor has flagged for your attention. Okay, now where are you? You are actually doing the audit field work. Okay, and it is 1st July 20x5. Yeah. Okay, now let's go and see what do they have the requirement wise. Okay, so using the information in exhibit. Comment on, like only one exhibit, meaning comment on matters to consider and explain audit evidence that you should expect to find during your review or audit working paper. Okay, so now this is actually MTC. Okay, so this one I want you to do it on your own. The one that I want to focus is on the further procedures. Okay, so it is now 1st September to Alama. You have to do that question, then only you can answer this actually. Okay, never mind. Okay, so let's just go and see this. This is matters to consider and explain what will be the audit evidence that you should expect to find during your review of the audit working paper. Okay, so now there is two things. There is new product and warranty provision. Okay, and then we have to discuss the implication of the audit report on the basis that no further adjustment have been made to the financial statement in relation to the warranty provision. Okay, so what is the implication to the audit report? Okay, most probably we will need to highlight the matter. We have to inform those charged with governance. Yeah, that type of implication to audit report. Okay, so now let's then look at the exhibit first. Okay. We'll look at the question first. Yeah, okay. So the draft financial statement recognizes a revenue of. Okay, so whenever they are showing you these figures, I want you to be aware of there are possibilities of using those increases and decreases in these figures for your skepticism purpose, for you to justify certain information. Okay, so please use there's no reason for them to give you last year figure because majority of the time they only give specific year's figures. You know, if they are using calculated. Okay, so now in profit before tax figures is also given to you, and total asset is 31.6 million. Last year is 30.2. So everything looks like it has increased slightly. Okay, new products. BSCO has started a development of a new smart vacuum cleaner, which is operated by an application of an user mobile phone. Okay, development of a new smart vacuum cleaner. Oh yeah, I read this. Okay, so yeah. Okay, so basically you will have an application in your phone to say when the smart vacuum cleaners should start their work. Okay, like let's say right, you go to work and then you are about to come back to work. Like say you're coming back home by 6 o'clock. Around 5 o'clock, you can use your phone and say that hey, vacuum please start cleaning. Okay, so something like that. Yeah. Okay, a working prototype of this product have been developed with generated significant interest on trade exhibition. Okay, so working prototype of this have been developed which generated significant interest in the trade exhibitions. Yeah, so many people is interested. I think if I so I've been interested. Yeah. Okay, so however the current cost of the production is 2,000 per unit. After problems in the product development cost the project cost. Okay, so after problems in the product development cost the project cost to go over budget. Okay, so currently the cost of production is 2,000. Yeah, so the audit team held a discussion with the product design director who informed them that he is skeptical that whether there will be sufficient market for this new product at a profitable selling price. Okay? He is skeptical that whether there will be sufficient market because the price is too high already. The audit team has been provided with a market research report which suggests a maximum selling price is 1,000. Okay, is achievable. The owner and the chief executive officer, William Bayers, has assured the audit team that the total costs which have been incurred on the new product, totaling 250,000, meet the relevant recognition criteria and such they have capitalized it as intangible asset in the financial statement. Okay, so commercial production of the new product has not yet been commenced. Okay, now you tell to me what's your opinion. Can you capitalize this development cost or not? Can you? Would you? Sorry, not would you? Are you allowed to capitalize? Okay. Now, if it's allowed to be capitalized, you have to meet all the pilot, right? Okay. So obviously you cannot. Okay. Sorry. Okay. So where is this? Hold on. Yeah. Okay. Where's the question? Hold on. Yeah. Obviously cannot. But what is the reason? Which item in the pilot that they are unable to achieve? Yeah. Which one? Yeah. Yeah, you cannot sell it. Ability to sell still there. Okay, you can still sell it for 1,000. It is achievable. So still have ability to sell. Still can sell. But you will not have probable future economic inflow. You will have sell it at loss. Okay, because right now the cost itself is 2,000. Okay, so I cannot capitalize. There is an obvious misstatement done there. Okay, so now we have to discuss on methods to consider on this part of it. Okay, now next one. Yeah. I think to save time, I'll share with you. Yeah, okay. So now next one is, of course, this is methods to consider. So I have obvious misstatement there. So I'll start with calculating what is the materiality of the financial statement item. Okay. So I will need to calculate based on the 250,000. Okay. And I have to talk about the recognition criteria. I have to discuss on the measurement. Now, measurement wise. Okay, they are currently measuring it at this whole amount. Yeah. Okay. So which is not appropriate. So now I don't need to calculate materiality of misstatement because the whole item is already material. Okay. So and then we have to discuss about the skepticism or not. Do you think? Is there any reason that they will be skeptical about it? How much is the increase? So currently the increase is 11%. Okay. Over here is 6.3 minus 5.4. Okay, here the increase is 16%. Okay, now do you see anything that is not right? Total asset is 30.2 minus 31.6. Would you discuss about the skepticism part of it? This one is increased by. You see revenue increased 11%, yeah, PBT increased by 60. So there is an expenses may be understated, yeah. Okay, so this is already reflecting it, right? Okay, so now let's look at the second point. Okay, now there is a misstatement, and we will need to discuss about implication to audit report also. Okay, so we might need to go and calculate, yeah, this 250,000. Okay, so 250,000. Currently, it is appearing in the total asset, okay, which is 31,316. Okay, currently it is how much? Yeah, is it material or immaterial? The new product, the 250,000. Material or immaterial to total asset? No idea is it? How do you calculate it? You take the whole amount and you divide it with the 331.6. Okay. Now, is it material or not? Are you all very tired already? Yeah, not material. Yeah. Okay. So it's not material. Yeah. Okay. So now we may want to tell the opinion that it is not going to be. It's not going to be modified. Okay. So remember, if you have one unmodified, you will need to talk about it as a total later. Yeah. Okay. So, okay. Yeah, I will send to you. The question. I'll share with you this so that we can do this question faster. Yeah. Okay. Okay. So this is actually the whole question. Okay. So I will send this to you. Metico, have I saved it or not just now? Let me just send to you this one first. I cannot. Hold on, yeah, for a while. Some problem. That's agreed. Send it, I saved it here. What now? Why? Yeah, I keep on saying it's being deleted. Hold on, yeah, for a while, yeah. Cannot be deleted, please. Meantime you're waiting, you can look at the next part of the question. Yeah, let me just send to you. Look at the next one, which is a provision, whether there is a misstatement or not. You know, you can do some calculation first before that. My spelling is a little bit wrong there. Yeah. Okay, so you can have a look in the WhatsApp I just sent, and then on the Metico. Meti. You have the document?
Yes, miss. Already.
Thank you. The notes one I will compile at the end and send to you. Yeah. Metico. Okay, I then the Bayes and also Mexico already. Yeah. So now let's go and look at the Bayes. Okay. So the one I think I spelling wrong. Later you Bayes. Here's correct the name. Just. Okay, so now let's look at the answer. Okay, the new product one. Yeah. Okay, so now the new product is 250,000 development cost. Capitalized represents 0.8% of the 0.8% of the total asset, and it is not material. Okay, then accounting treatment. Bayes only started to develop this product. Okay, just a year started to develop. Cost to date have been capitalized. Okay, there is no information as to whether the research cost has been expensed or not. Research cost must be expensed of when it is incurred. Okay, so this is all on the recognition part. Yeah, the product is only prototype, which costs 2,000 to produce. Okay, product. Prototype, okay, which yeah, the product prototype itself okay, cost them 2,000 to produce, okay, and maximum selling price is 1,000. To meet the criteria of technical feasibility, there must be the product which costs less than 1,000 to produce, okay, and currently the product is not technically feasible. Next is the cost. The cost is 2,000 to produce, and which means the selling price must be more than 2,000. However, market research shows that the maximum selling price is only 1,000. There is no demand if the selling price is more than 2,000. Okay, so next is you can talk about there is currently no commercial viability, which means no future economic benefit there. Okay, cost per unit is 2,000, maximum selling price 1, so currently it's going to make us loss making. Okay, buyers must have sufficient fund to complete the development and launch it to commercial production. Okay, presently there is no information on this matter because there is no date of launch or given to us. Because if they are launching, then we know, okay, so this is more of capitalized characteristics already met. Okay, none of the recognition criteria we met, so this is supposed to be written off debit operating expenses and credit the development cost. So this is all on what is this? This is all on the accounting standard issues. Okay, now risk is that the management will continue to capitalize the cost of 250,000, saying that the CEO is convinced that the recognition criteria is met. Okay, so consequently development cost is overstated and research cost will be under. Okay, so this is the risk part of it. Okay, now I'm not going to talk about skepticism so much. Okay, now of course we saw that there is a risk that there is an understatement of expenses, and the reason could be because of this. Okay, skepticism is when you want to say, yeah, the management is confident about something that doesn't make sense at all. Okay, so in this case, of course, he is convinced, but want to manipulate 250,000, something immaterial, a little bit, doesn't actually achieve anything for him much. Okay, so now materiality of misstatement is the whole amount, okay, of PBT, and it is not material also. Okay, here is on total asset because it's currently appearing in total asset. Okay, the misstatement is understated in expenses in PBT, so I'm using this as the benchmark. Yeah, okay, so now the research cost. Okay, so next is on the evidence already. Yeah, what I want to confirm. Okay, so remember in the recognition criteria we mentioned, we don't know have they expense of any research costs or not. Okay, so do procedure for that first. Inspect management account to confirm whether research costs have been expensed. Okay, next is we list down on technical feasibility. So review the test result to confirm the prototype is working as intended using the mobile phone. Inspect the latest management account to confirm cost to produce one unit is 2,000 and discuss with the product design to understand whether the problem in the product development have been resolved or not. Okay, so all these are on technical feasibility. Next is on the commercial viability. Okay, now research, inspect the market research to see whether the demand for this vacuum cleaner exists or not, and if the selling price is below 1,000. Okay, so discuss with them, is it why he is skeptical that this product must be sold above 2,000. Okay, so like ask them things like, is it possible for them to reduce the price or some, discussion. Now on profitability, inspect profit forecast to see over its life cycle, to confirm potential profitability. Because sometimes first year will be loss making, and then the subsequent period it will be profitable. So you inspect and see is there justification from that perspective. Okay, because sometimes when we launch, we will have losses. Okay, then subsequently it will be profitability already. Okay, fund to complete the development and launch of the product. Okay, so you want to go and find out. Okay, so discuss on the inspect the profit forecast. Also, yeah, I'll inspect this also from profit forecast. Inspect the profit forecast. Okay, so inspect the profit forecast to confirm that the client has the fund. Okay, so from the forecast we can kind of see fund to complete the development and launch the product, commercial production. Okay, so review fund approved for the development of this product to see whether the amount spent to date, on the sufficiency of remaining fund. So all these are actually from the profit forecast itself. Yeah. Okay, yeah. So then last one is you obtain written representation to say what is their intention. Do they have intention to complete the development or not? So now do you need to write this much of procedures? You don't need to, okay? So but just in case if you only get technical feasibility, you can put this. If you get only on commercial viability, you can put this, okay? So these are all options for you to, not options, these are all ideas on overall idea about the whole scenario. Okay, now I think that's all for this part of it. Now, do you have any question or not? Any of those points that is not clear for you, you want to clarify or something like that, you want to ask? No? All okay? Okay, yeah. Okay. Yeah, I just want to think whether should we put any skepticism. But it's very immaterial from both the perspective. Okay, now let's look at the second point. Yeah, okay. So the second point is on the we don't need skepticism. Okay, so warranty provision. Okay, so they have established a standard warranty scheme placed for its retail customer, where the company will fund retail customers for any reason within the 12 months period for the of the date of sale. Okay, so this 12 months. Any reason, yeah. So this standard warranty offered to all customers with no extra cost. Okay, so no extra cost provision is a must, yeah. So base code does not operate an extended warranty scheme. Okay, there is no after 12 months. At any point of time, there is a significant amount of uncertainty in relation to measurement of the warranty provision. Okay, uncertainty there. Now, but the finance director and the finance department was previously estimated the provision at the year end based on the percentage of total sale. Okay, in previous years, the audit team have concluded that this has been reasonable basis for the provision. So this is in the past. Okay, however, this year CEO has also been involved in estimating the value for the year end warranty provision. Okay, so why would the CEO come and join here to go and do the estimation? Okay, for the year ended, the warranty provision is 2.1 million. Okay, based on the CEO's estimation. So all these are telling to you, A, he's doing something. Okay, so like shouting out to you, yeah, based on the CEO estimation. And last year is 4.3. Okay, does it make sense or not? If you're saying last time it is going to be based on percentage of total sales, your total sales, did it increase or decrease? Yeah. The total sales, right? Did it increase or decrease? Yeah. Yeah, that's how we calculated, isn't it? Increased. So does it make sense why you want to reduce the warranty? Okay, and then during the discussion with the sales, okay, so you can justify this with the calculation only. Okay, so during the discussion with the sales director, the audit team noted that neither the range of customers nor the nature of the warranties has changed significantly compared to prior year. Why your measurement or your basis need to be changed? Okay, so discussion with the customer service manager has not indicated any unusual level of complaints or fault. Okay, and the year which justify the change and in how the warranty provision should be estimated. So that is the situation that we have, and we have to talk about methods to consider. Okay, why I only have up to this? Oh, okay, second part is here. Okay, so now let's just go and look at what I've been already shared with you. Okay, so now you have to understand it doesn't make sense. The way that the basis that they are using all this is indicating that might be some skepticism that we need to write down also. Okay, so now materiality of the provision represent is what is now currently presented. Yeah, so it's 6.64 of the total asset, and what the warranty provision is recognized in total in the liability, right? And is material. Okay, so it is material. Yeah. Okay, so now let's go and look at accounting treatment. Warranty provision seem to have. Okay, so yeah. Okay, so your warranty provision seem to have been incorrectly measured. Okay, so there is no evidence that the product has improved in quality. So therefore, the warranty provision should be measured the same way as the last year. Okay, now I'm not going to write a lot on IAS 37. Yeah, because of that I have to recognize provision only. Okay, let's tap on the issue. The problem is they are recognizing, because if they are not recognizing, then we can talk about the recognition criteria. Okay, now they are recognizing, but the measurement of this recognition is not appropriate. Okay, because it doesn't have any proof to say that they have improved. Okay, risk that management may continue to measure the warranty provision at 2.1 million, saying that the CEO insists on this valuation. Okay, consequently, warranty provision and corresponding expenses will be understated. Okay, now let's talk about skepticism. Skepticism, we want to put in all our analysis. Yeah, we want to say revenue increased by 11, but warranty provision reduced by 51%. Okay, so this does not make sense. Warranty provision increase, decrease. Warranty provision increase, decrease. Oh yeah, okay. So increase and decrease should be broadly in line with revenue increase and decrease. Okay, so this year warranty should have been. Okay, by you calculating all this, you are using the appropriate information to derive to the figure. Okay, so it should ideally be 4.3, which is last year's figure, multiplied with 1.11. Okay, why are I saying 1.11? Because your revenue has increased compared to last year 11%. So it should ideally also increase by 11%, which is 4.77. Okay, so audit adjustment should be debit operating expenses 2.67, warranty provision 2.67. I have to adjust, increasing the provision. Okay, so with this, what will happen is your revenue will become 55.5. Okay, then your warranty provision, yeah, WP here is warranty provision. Okay, so the warranty provision will become 4.77. Okay, so materiality of the misstatement is 2.67. Okay, now the increase in provision is the increase in provision of, okay, so 42.47 is of PBT is material. Okay, so the materiality of the misstatement. Yeah. Okay, so what we have to do in terms of evidence. Okay, now my evidence is more on what will be your concern area. I would want to know why is the reason reduced. Okay, I would want to know what is the reasonableness of the method or the assumption used. What is the data that you are using? Is all this. Yeah, so that's why I put MADCS. Okay, method, assumption, data, calculation, and also subsequent event, which I want them to prove on all this to say that your estimation is right. Okay, so on the reduction of warranty provision, review the management meeting minutes to understand the rationale for reducing the warranty provision to a very specific figure of 2.1. Yeah, I want to understand. Okay, inspect the quality inspection report to see whether there is any improvement in this quality. So then it makes sense the warranty provision is reduced. Okay, point of estimate, you may want to recalculate the warranty provision, discuss the variance with the management or the CEO, audit adjustment. Okay, so here we want to go into do the additional further action. Okay, so what is the further action? Request management to increase the warranty provision to be in line with the method used to 20x4, because this is supposed to be consistencies there. Okay, and request should be documented. So this is your further action, and your further action is requesting them to make your audit adjustment. Okay, is there anything else that you may want to do as a further action? I can't say that I want to tell to those charged with governance or at this point of time, yeah, because there is no any reluctance from the management yet. So I'll just put in, I'll request management to do first. Okay. Subsequent event. I'll look into subsequent events to see that the warranty actually reduced. Okay. Okay. Any other question that you all have? Welcome. Okay, now let's go look at part B of the question, yeah. Okay. Part B of the question will be here. Okay, so it is now for September. Okay, previously it was for July, now because September already. The audit report of Bayer's co-financial statement for the year ended 31st March is due to be issued in next week. Okay, so the audit team has gathered sufficient appropriate audit evidence in relation to the new product cost and appropriate adjustment have been made in respect of associated research and development costs. However, management has indicated that they are not willing to make any further adjustment in relation to warranty provision. Okay, following further testing, the audit team has concluded that the warranty provision should have been determined using the same estimation method as the previous year. Okay, based on sales of percentage of sales. Okay, discuss implication to the audit report on the basis that no further adjustment have been made. Okay, to the financial statement in relation to warranty provision. So now we want to talk about the nature. Nature will be what? Yeah. Our nature is going to be financial statement contain material misstatement. Okay, because we already calculate it is a material misstatement. Okay, and then we have to discuss about the severity of it. Severity is material, but it is not pervasive. Opinion is going to be qualified except for. Okay, and then basis. Okay, so that's about the 5 marks. Where can we get additional points? We're going to get on further adjustment. Okay, so we have to discuss about what are the further adjustments that need to be put in. Okay, so let's go. Okay, so nature. Management unwilling to increase the warranty provision. They are unwilling to increase the warranty provision. The warranty provision should be calculated as a percentage of revenue. Consequently, right now the provision and corresponding expenses is understated. Audit adjustment should be operating expenses 2.67 and warranty provision 2.67. Okay, if adjustment not put through, the financial statement is misstated and not a limitation of scope. Okay, so when you talk about implication to audit report, you must always talk about the nature. Identify nature first, then you move on severity. Okay, severity is at the additional charges of warranty provision. Yeah, 2.67 is 42.4% of PBT and it is hugely material. Okay, but on its own, it's only one item and hence it's not pervasive. Okay, opinion is if the adjustment is not put through, the opinion will be qualified except for saying that the financial statement material is stated due to non-compliance with ISA 337. Okay, opinion will be worded except for the financial effect of it, the effect of the matter described. The financial statement shows a true and fair view. Basis is you must have reason, you must have the title of it, and also the position of it. Okay, so that's the basis of opinion. So that's all for the Bayer's question. Bayer's. Okay, sorry, Salah. Okay, Bayer's. Okay, not. Now this part here, no, you don't need to. Okay, so in fact, you will not get any additional mark for doing that. Okay, so examiner is not giving you additional mark to put in the exact standard name and all those things. But of course, when you look at the provided answers in the PPT or past year papers, they'll give full explanation. Yeah, but the examiner not giving you marks for that. Okay, so it's safe to say most of the time you can say applicable financial reporting framework or the IFRS is safe, still safe. Don't know the number, don't worry. Yeah, in fact, yeah. Okay, so number alone is fine, but in fact, even if you don't put in the number, it's still okay. You don't stress out with the am I writing the right number or not. Okay. Yeah. So hold on, yeah. I don't have the second part of the question. Something not fine. There's actually another part of the question. Let me. This is from the past year paper. Okay, so now this quick one. This is some amendment to the question. Okay. Okay, so hold on, yeah. Let me share with you. This is an extension of the question. Okay. Damn, I don't know why this one won't. I'm actually transferring to here, but why it's getting deleted, I don't understand. See, this is accept. This was from the practice platform. Hold on, yeah. I want to share with you this question. This work. Would you think that way, or you will need to go and do your further procedures and action? Yeah, you won't. Okay, ideally you cannot. Yeah, later the thing will come back and haunt you in the future. Okay, so this is you need to do further procedures. Now I want to sell means what's the meaning? I will not continue the business. It's a going concern issue already. Okay, I will not be able to continue as going concern because I'm going to sell it. Yeah, and they're already in the advanced negotiation stage. Okay, so let's go in. The answer is already there. Yeah, it's at the bottom there. of the answer. Okay, so this is the implication. Okay, so number one, company about to be sold. Okay, audit risk increased. So that's the information. Yeah, William may have manipulated the financial statement to attract the buyer and get the best price for his shares. This means asset and revenue may be overstated and liabilities and expenses can be understated. So now we can understand. Oh, maybe he don't want to increase the warranty provision for this reason. Okay, so further action. So what I would want to do is, because there is possibilities of increased risk already. Okay, my overall materiality now should be reduced. Okay, consider whether more financial statement item need to be audited or not. Okay, and then trivial materiality should be reduced also. Okay, smaller misstatement should now be included in summary of uncorrected misstatement, because earlier we had the 250, we thought, oh, it's immaterial, but now I will take it to account. Okay, so that is your further actions. So we were talking about procedure to completion, right? These are further actions. Okay, implication number 2. Failure to inform the audit team casts doubt on the integrity of the management, and therefore should have been there should be more critical assessment done on the audit evidence. Okay, so all the previous given explanation by the management must be re-reviewed, like for example, a written representation on. Now, audit evidence on development cost, warranty provision now all become a reassessed item. Okay, additional procedure should be performed on all accounting estimate involving significant management judgment area. You may need to re-audit the impairment losses, the value in use of asset. Okay, so value in use of the asset may be different if the company run by a venture capitalist. So all this we need to reconsider. Okay, and implication number 3: sale of the company may mean the company operation may significantly changed. Okay, and a going concern should be re-reviewed to consider how the change in ownership may affect profitability of the company, whether the company will have fund, and if the company does not have fund, whether they will have access to fund and the availability to settle debt when they fail to. Okay, so to consider possibility of loss of major supplier, major customer, key employee, because we want to evaluate and see their going concern ability. Yeah? Okay, so this may discontinue the association, and this may give rise to material uncertainty as ability of the company to continue as going concern. Okay, as guarantees given by Williams to the bank for the bank loan may be violated if William sells the business. Okay, then the bank could recall the loan immediately. So these are all some ideas that you should be thinking about. Oh, now many items in the financial statement will become misstated. So what are those things? Okay, value in use, estimation areas. If it's ongoing concern, the bank covenant will it be breached? So these are implication to the audit. Okay, so implication number 4, implication for the audit report. Okay, the signing of audit report should be delayed until a further action to be completed. Okay, if Williams insists that the audit report to be signed now itself before further audit work is done, a disclaimer of opinion should be given. You have no choice. Yeah. So these are some further action to be taken. Okay, it's not saying my audit procedure. Yeah. Are you okay so far?
Means this one we provide disclaimer because it heavily related to going concern issue, right?
Not only because of that, because of he's not allowing me to do other further action. Okay, now I doubt on many areas already. So suppose I have to go back and test it, then only I want to come and issue the audit report. But if he asks me to sign it now itself, so I have disclaimer because many items in the financial statement could be misstated. So that's why we are not even giving qualified except for we are giving disclaimer straight away because I'm doubting on many items in the financial statement, just like how we have listed down just now. Yeah, so I'm doubting on the bank loan. Yeah, whether I might need to repay. I may concern about the value in use because the value in use, accounting estimate, accounting policies, all these are still valid. So many items in the financial statement can be misstated. So that's why it's a disclaimer.
Okay, so if like there's new info, for example, question like this lah, and then they are new info available for us, and then they don't want to change delay the audit report, and then we need to most probably we will issue disclaimer, or there is any other situation where we don't have to issue disclaimer. Yeah, even though they don't want to delay the signing audit report date.
Okay, now that one is really depends on what's the issue. Now in this case, it's disclaimer because it's affecting many items in the financial statement. Probably the new information that you get is relevant to trade receivables only. Let's assume, yeah. Let's say you get the information that one of their major supplier is already on liquidation, and you got it very close, same situation maybe before you signed the audit report only. So if like that, you will give qualified except for audit because it's only one item. But here, it's because they want to sell the business. So sell the business means there are many factors to consider. So that's why it's disclaimer. Okay. Now maybe it's in a situation where it's towards the end and you get to know that they are not providing you a particular information. It could be some kind of limitation of scope. So if it is a limitation of scope and it is on one matter, then it's going to be except for. So it really depends on the reason that we want to modify the audit report. Okay, or the scenario wise. Yeah, depending on the scenario. Answering to your question. Yeah.
Okay, so let's say if we encounter this type of question in final, and then we just try our best to justify the implication, and then if our opinion is wrong, we won't be penalized, right? Like maybe they don't give us mark for our opinion, but maybe the justification, if it's right, do we still able to secure a mark?
Now, there's always no negative marking. Yeah, negative marking means there's no I will reduce your marks. Okay, so if you wrote it correctly, okay, so in this case, I don't find qualified except for will be the right answer. So even if you are, if your opinion is inappropriate, the mark allocated for the opinion you won't get. Okay, but if you can justify, let's say if I'm telling it from audit report perspective, right? If you can explain your nature correctly, you can explain your severity correctly, your justification on those parts are right, you will gain marks. But your opinion, you gave a wrong opinion, you will not get marked there. Okay, instead of if you ask, you will be penalized. No, you won't be penalized. Yeah, penalized means you are getting, reduced in mark, isn't it? Is that what you meant? Yeah, no, you won't get penalized in that manner, but you won't get marked for that, that opinion. Yeah, okay. Rather than but as long as your justification is right and it is acceptable, but our justification will be related to our opinion. Yeah, so I don't think there'll be, if I chose disclaimer, then I will justify because many items in the financial statement is misstated. So I don't think it can be correct if my justification. I don't think my opinion and my justification will be two different things. It will be defining or it will be justifying the opinion. So ideally, justification also won't get marked. Yeah, but your nature you will be able to get marked if you're able to explain your severity correctly. Then you can get the marks. Okay, but of course here we are not talking about the nature severity, all right? Because of this is just a further action. My further action is I just want to say that now if they are forcing me, I am going to issue still the audit report. Okay, but I don't have information, so I'm going to give disclaimer. Okay, but if it's on one matter, it's qualified except for. Okay, so maybe I should have put it this way. Yeah, a disclaimer opinion should be given, seeing that many items in the financial statement So any item in any items in the financial statement will require further procedure to be the procedures to obtain sufficient appropriate audit evidence information may indicate the sufficiency and appropriateness indicate that the evidence obtained to date is insufficient and or inappropriate. Okay, so I want to say that right now with this new information, so whatever that I've obtained up to now may not be sufficient. It may not be appropriate. So I need time to do further procedures. Okay. Who was asking me just now? Are you okay?
Yeah, okay, madam. I just afraid like I couldn't see the extent of the things to further lah. For example, maybe I only thought it will just be qualified like that. That's why I asked about the
No worries,
opinion.
I mean, good question. Okay. So the reason is because it will affect this scenario will affect many items. Okay, but it makes sense if it's on a smaller issue. It's only one issue. It might be qualified except for. Okay. Now there's one more question. Okay, it's called let me just show you. Which I want you to try. Okay, so this is also still procedure to completion. It's called my role. So this question, my own question. Okay, so you have a look and try this question. Okay, so try this question. Focusing on the exhibit 1. Okay, exhibit 2 is on the chairman's statement, which we haven't do. Okay, I mean we haven't covered the audit report yet, so don't do that one. You please try on exhibit 1. Okay, so exhibit 1 means this one, part A. Okay, so part A of the question, please try. Then later I will share the answer with you, and in the next class we can also discuss this. Okay, so this means hold on, this means. Okay, so this means that this is my own question. You will do it on your own. Okay, and we will discuss the answer. Arjan is something that I want to do with you in the class. Okay, so this one we will do it in the next Wednesday class. Okay, and we can start with meeting with management, communication with those charged with governance. Yeah, all these parts, and we will start. I don't think this will take so long. Yeah, okay, so hopefully we can do this about 1 hour, 1.5 hours. Then we will start with audit report in the next class. Okay, so audit report done means we can't finish with the whole of audit report. Then I might need to continue on Saturday audit report and also the non-audit services and the quality review in the last class. Okay, so that's the idea about the remaining days of classes that we will have. So I hope you will continue practicing the questions. I will update all the information that I have with your class tomorrow. I'll upload all the questions that we have done and the answers that I owe you, and I'll put it in the WhatsApp. Remind you all that I put it in the Flex already. Okay, so I think that's all that I have for today. So